Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into a filing that might sound like a snooze fest, but trust me, there are some interesting twists and turns. We're looking at a report from Capital Series Trust, which is like an umbrella for a few different investment funds. It's their shareholder report, so let's see what they said to their investors. This report covers three funds: Fairlead Tactical Sector ETF, Reynders McVeigh Core Equity Fund, and the Nightview Fund. It's like checking in on three different drivers to see how they steered through the last year. So let's see what went down with each of them. First up, let's peek at the Fairlead Tactical Sector ETF, ticker symbol TAC, which trades on the NYSE Exchange. This is an annual report covering February of 24 to January of 2024 to January of 2025. Basically, it's a fund that invests in other funds, specifically sector ETFs, which are collections of stocks from a particular industry like technology or healthcare. So what did it cost to play this game? Well, for every $10,000 invested, it cost about $63 or 0.59%. This is the expense ratio, the cost of running the fund. Now, for the real question, how did it perform? Fairlead says it did pretty well, beating its benchmark, the Morningstar Moderate Target Risk Index, by 3.75% or 375 basis points. It got a total return of almost 15% compared to the benchmark's 11%. In early 2024, this fund went heavy on sector ETFs, taking a risk-on approach. Basically, they bet big on specific parts of the stock market. Later in January of 2025, they dialed it back a bit, adding some gold, short-term US Treasuries, and long-term US Treasuries. This move was meant to add some stability in case the market got rocky. Also, their holdings are in ETFs, which is tax efficient. Some quick stats: the fund has about 220 million in assets spread across 10 holdings. It had a portfolio turnover of 59%, which means they swapped out almost 60% of their investments during the year. Finally, on the 31st of January, 99.7% of their assets were in exchange traded funds. Moving on, let's check out the Reynders McVeigh Core Equity Fund, ticker symbol ESGX. This fund is all about core equity, which generally means investments in established large companies. This report also covers February of 2024 to January of 2025. What did it cost to play this game? This fund was a bit pricier, costing $104 for every $10,000 invested, or 0.95%. 2024 was a bit of a wild year with wars, elections, and other upheavals, but the stock market did surprisingly well. The S&P 500 went up 26%, while the MSCI Dow World Index returned 21%. This fund, however, returned 19.65% during their fiscal year. The fund avoided some of the Magnificent Seven stocks like Amazon, Meta, and Tesla, which hurt performance. On the flip side, holdings like Nvidia, Interface, and IBM have a strong ethical stance to investment. Now for some numbers. The fund has about 87 million in assets spread across 48 holdings. The portfolio turnover is just 25%, so they're holding on to their investments for longer. Most of the investments are in the United States, then France, then other regions with smaller weighting. Last but not least, we have the Nightview Fund, ticker symbol NIGHT. This one's a bit different because it's relatively new, with the report covering from June to January of 2025. This fund cost about $140 for a $10,000 investment, or 1.24%. From the summer to the end of January, the fund went up 25.56%, while the S&P 500 went up 14.38%. It seems like the fund benefited from their investment in Tesla and Amazon. On the other hand, MGM and AB&B underperformed compared to the others. Some key stats: the Nightview Fund has about 27 million in assets and 18 holdings. There is 46% portfolio turnover. Also, the holdings have a large holding in consumer discretionary goods, hotels, travel, and the financial sector. Here's a twist in the tale: all three funds changed their accounting firm. Ernst & Young LL resigned and Cohen & Company Limited was hired. The report claims there were no disagreements with Ernst & Young during the fund's two most recent fiscal years. Let's talk about the money behind the scenes. Audit fees for each of the funds are around $13,000 for the year. They also paid taxes, which is a cost that they billed around $3,500 each. The big bosses of Capital Series Trust are saying that their controls and procedures for managing information are working well. Also, no big changes that could mess with the money numbers. Well, that's a lot of numbers. Let's step back and take a look at things from a wider point of view. It's clear Capital Series Trust is trying to provide investors with different strategies to play the market, from sector bets to core equity. But these are just numbers on a page. The real test is how well these funds perform over the long run. If you are an investor, From my point of view, these funds are mostly following industry trends, and I'd like to see some more risk management. Overall, Capital Series Trust seems to be doing okay, but a shareholder report is not enough to make an informed decision, and you shouldn't be using a stranger's opinions on the internet either. Thanks for watching Corporate Decoder. Make sure to like, subscribe, and leave a comment below. Do you have any financial filing stories that you'd like us to decode?